Welcome to Accounting for SS1 at LightTech Academy. Today we study the profit and loss account. What is the profit and loss account? The profit and loss account, P&L account, is prepared immediately after the trading account. It starts with the gross profit or gross loss brought down from the trading account, then adds any other income and deducts all business expenses to arrive at the net profit or net loss for the period. Formula: net profit equals gross profit plus other income, all business expenses. Structure of the P&L account: debit side, expenses and losses. All business expenses, wages and salaries, rent, electricity, insurance, telephone, stationery, repairs, advertising, motor expenses, bank charges. Depreciation of fixed assets. Bad debts written off. Provision for bad debts, increase. Carriage outwards. Net loss, if expenses exceed gross profit plus other income, carried down to balance sheet. Credit side, income. Gross profit B/D, from trading account. Other income, rent received, commission received, discount received, interest received. Net profit, if income exceeds expenses, carried down to balance sheet. Worked example. Gross profit B/D from trading account, 295,000 Nigerian nairas. Other income, rent received 18,000 Nigerian nairas. Commission received 7,000 Nigerian nairas. Total income, 320,000 Nigerian nairas. Expenses: wages, 80,000 Nigerian nairas. Rent, 36,000 Nigerian nairas. Electricity, 12,000 Nigerian nairas. Insurance, 6,000 Nigerian nairas. Depreciation, motor vehicle, 45,000 Nigerian nairas. Bad debts, 4,000 Nigerian nairas. Carriage outwards, 5,000 Nigerian nairas. Advertising, 8,000 Nigerian nairas. Stationery, 3,000 Nigerian nairas. Total expenses, 199,000 Nigerian nairas. Net profit equals 320,000 to 199,000 Nigerian nairas equals 121,000 Nigerian nairas. Note on adjustments, accruals concept. The P&L account is prepared on the ACCIULS basis, matching income and expenses to the period, not when cash moves. Accrued expenses, outstanding expenses, expenses incurred but not yet paid by year-end, e.g. electricity used in December but be not yet paid, must be added to the expense in the P&L, appears as a current liability in the balance sheet. Prepaid expenses, prepayment expenses paid in advance for a future period, e.g. insurance paid in October covering November-October next year. The portion relating to next year must be deducted from the expense. Appears as a current asset in the balance sheet. Accrued income, income earned but not yet received. Added to the income. Current asset. Deferred income, income received in advance, income received but relating to next period. Deducted from income. Current liability. Net profit versus net loss. Net profit, the credit side exceeds the debit side, the business has made money. Transferred to the capital account, it increases the owner's capital in the balance sheet. Net loss, the debit side exceeds the credit side, the business has lost money. Also transferred to the capital account, reduces the owner's capital. Distinction: gross profit versus net profit. Gross profit, revenue from selling goods minus the cost of buying/making those goods. Deals only with trading, buying and selling. Net profit, gross profit plus other income minus all business expenses. The final profit after all cost. Remember, profit and loss account equals prepared after trading account equals starts with gross profit brought down equals adds other income equals deducts all business expenses equals arrives at net profit or net loss. Formula: net profit equals gross profit plus other income minus all business expenses. Debit side, All business expenses / wages plus salaries plus rent plus electricity plus insurance plus telephone plus stationery plus repairs plus advertising plus motor expenses plus bank charges plus depreciation of fixed assets plus bad debts written off plus provision for bad debts increase plus carriage outwards plus net loss if expenses exceed income. Credit side. Gross profit B/D from trading account plus other income / rent received plus commission received plus discount received plus interest received plus net profit if income exceeds expenses. Adjustment / accruals concept. Accrued expenses / outstanding equals expenses incurred but not yet paid equals added to expense in P&L equals current liability in balance sheet. Prepaid expenses / prepayments equals expenses paid in advance for future period equals portion relating to next year deducted from expense equals current asset in balance sheet. Accrued income equals earned but not received equals added to income equals current asset. Deferred / income received in advance equals received but relates to next period equals deducted from income equals current liability. Net profit equals credit side exceeds debit side equals business has made money equals transferred to capital account / increases capital. Net loss equals debit side exceeds credit side equals business has lost money equals transferred to capital account / reduces capital. Gross profit versus net profit. Gross profit equals revenue from selling minus COGS equals trading only. Net profit equals gross profit plus other income minus all expenses equals final profit after all costs. Thank you and keep excelling at LightTech Academy, powered by LightTech Solutions Limited.